Good morning, everybody. I trust you well. Monday morning, been a bit of a busy morning. Obviously we woke up this morning really wanting to see what would happen related to the downgrade, how markets opened, and you'll see that I've actually put on the chart here. This is the rand dollar exchange rate coming in, so you can see in early trade up here. Rand strengthened, and then we saw this weakness to well over 18 to the dollar a little bit later, but now we're seeing the rand strength come quite a bit back from that perspective. And so a couple of things to note. So I will pass forward Villy's commentary from Moody's a little bit later after I've done this. But a few things to note. First of all, I think lockdowns are happening pretty much around the globe. Australia now talking about 6 months of potential lockdown. Most people are in somewhere between 3 and 4 weeks, depending on where you are in the globe. So this is pretty much a global event. I think the downgrade, from our perspective, as we indicated in my note on Saturday, that was built into the price ahead, and we have seen some more weakness today. It'll be interesting to see what happens as the Americans come into the market, but that may really be the Americans coming into the market as things open from that side. I think we have had a reprieve from the World Global Bond Index not taking us out to the end of April, and we'll see how that goes. So we could certainly see some more weakness from there. But still, our feeling is that ultimately that we will see money coming in, seeking a higher net real yield as opposed to what they can get around the rest of the globe. So just from a thinking point of view, how are we acting? So we had an investment meeting this morning via Zoom, and we may put one of those together for the consulting team a little bit later. But we chatted around a number of things. We do think that what's happened is going to hurt the South African economy substantially. We're going to see its effect. Definitely it is going to have an impact on dividends, and we have no idea how that's going to play out. There are multiple companies coming out suggesting they will have to check out what they're going to do from a dividend perspective, and may withhold even an interim dividend, or they may delay a dividend. I think it has to be a wait and see, because the biggest problem that every businessman has out of this is how strong is the recovery going to be. And I'm not sure that there's anybody in the globe who can tell you what the recovery will look like. Certainly there will be a recovery, we will get through this, and we will return to some form of normality. But there seems to be a massive diversion among economic commentators as to whether it will be V-shaped. In other words, we go straight back where we were. We kind of doubt that, as opposed to maybe the other end of the scale is an L-shaped recovery, which is literally things have fallen off and then will go sideways for a long time before they slowly start to recover. We probably midway between the two, to be honest. We do think there'll be a sharp recovery at some point, but certainly not to the levels prior to this crisis. So going forward, I think what we're continuing to do is looking to make sure that for income clients, we will continue to make sure that we've got the cash available to make sure that their income is provided over this period. I think for growth clients, what we're looking to do is we're looking at portfolios closely, making sure where there's imbalances, we're taking some profit off the table. So maybe shares that have outperformed in this period would be shares that would give us the opportunity to have some cash in order to buy opportunities. I think there's one thing that needs to be spoken about very importantly, and this is a message that everyone needs to get, is that the volatility in share prices is going to continue. And I think we haven't seen the worst levels of some really, really good companies. So let's just dig into that a little bit deeper as to why that is going to be, because I think it's very, very important. The investment professionals cannot understand clearly what's going to happen going forward from here. So we can model a whole lot of ideas, but there's not a lot of clarity, and we will be looking at data and statistics to suggest how the recovery is going to be. Everyone is most likely watching China to see how the recovery in things are happening on that side, in terms of restaurant bookings, flights, resorts, that kind of thing. Consumer expenditure is going to be very, very key thing that everyone will be looking at. And then I think the other thing is that, so as a result, what will happen is that asset managers who are sitting on cash are not going to be aggressively buying. They are going to be, probably the best term to put it is nibbling, taking positions, but I wouldn't think that the conviction is massive, because the metrics of a company that looks cheap on historic earnings might not necessarily be that price, because we don't know what the future earnings are going to look like, because environment is uncertain. So I think what we need to understand is that the professional investors are sitting on the sidelines. On the flip side to that, there are going to be significant numbers of distressed investors. They may be distressed businessmen who need to pull out and sell in order to cover debt, in order to cover positions, in order to pay salaries in their business, in order to keep their businesses going, whatever it is. But there's going to be more forced sellers than there are buyers. That is going to lead to an even bigger mismatch. And I would think that we probably haven't reached the point where sufficient buyers are going to come to cover the forced sellers. So at this point, it is not the time to panic. And for that reason alone, if you understand the dynamics in the background, and think about that, selling out a portfolio wholesale just does not make sense if you're a long-term investor. Looking to take some money off the table in order to take advantage of future positions is one thing. Selling out in panic is quite another, and so understand that dynamic still has to work its way through the market. Once professional investors start to see what's happening in those countries that are ahead of the curve, the China, the Koreas, potentially even the Italys probably will give us a good indication. That will start to give us a base case to assume and start to apply a metric to the companies that we like now, and will give us a degree of comfort in buying forward. Only once that picture starts to become a little bit clearer will you start to see wholesale buyers meeting the sellers on the other side, and then we'll start to get some stability in the market. It's likely we're all watching the same things, so we're probably going to come pretty much back into the market at the same time, in which case we're going to see the market move very sharply up at that point. So I hope you're staying well and safe. I certainly hope that you're finding things to do. I've just had a long conversation with a client. Try not to watch too much news. Try not to let your thoughts go too negative. Plan for a positive future, and think about what you're going to do into that time. Thank you for your time. Enjoy the rest of your day. I'll connect probably in the next day or two. Thanks.